And good morning. We are live. It's Friday, January 13th, 2017. Let's flex those muscles. Let's get ready to do some work. Right, we're going to talk about tax projections, and there's some good questions that were asked. One in particular that stood out to me that I want to kind of start with. Before that, I'll just cover the non-tax planning related questions. So Dennis wanted to know what I'm teaching in my Excel class today. It's a basics class, so it's like intro to Excel. They gave me the roster. There's almost 60 people registered. And it's all faculty. It's all over the map. There's everybody from campus police to actual, the people who teach classes there and administrative people. It's like everyone. So it'll be interesting. When I start the class, the first thing I'm going to do is ask, like, who's got zero experience with Excel versus who's got some experience and so on. Mariette, it's your turn to answer this question that I usually get. Do you ever sleep? Alexa wants to know.
Alexa. Actually, I'm going to be perfectly honest, and I think this is good for us to really talk about it. I have to start sleeping more. I started having some problems with my eyes, and so I went to the doctor, and I thought it was something else, and they said, you don't sleep enough. So just so you know, if you start blinking or your eyes get too dry, you could be not sleeping well. So I usually sleep on average, and this is since I was like 18, 3 to 5 hours a day, and I was perfectly fine. No wonder. I'm turning 40 this year. I don't know if that's why, but I'm struggling, and so now I've upped it to 6 hours. So I am sleeping 6 hours.
Well, and I've tested this on myself and learned that when I'm better rested, I actually get more done in less time. So we live in our society in this illusion that we have to put in 80 hours a week, and I'm just going to come straight out and say it's BS. It's not true. You don't need to work 80 hours a week. You'll get more done, and you'll be more productive in the hours that you do work if you're better rested and better balanced. I've proven it because I've tried it on myself. People ask me if I sleep. The funny thing is I probably sleep more than most of you. Most nights I'm in bed by around 8:30, 9 o'clock at night, and that's how I get up at 4 o'clock in the morning. And, and then I get up at 4, but I'm not working. I'll do a little bit of work. That's when I do some reading usually first thing in the morning. And then I'm at the gym working out 3 days a week these days. So balance is really, really important.
I agree.
Let's see. I think those are all the non-tax projection related questions. Okay, so then the kind of the big question here, and this was asked by Jen, who I don't know if she's actually here with us. She's not. I'm looking at the list. If I'm a bookkeeper and don't do tax work, how can this help me? So I'll start, Mariette, and then I'll turn it over to you for your response to that question. I think first and foremost, why this is important for bookkeepers to know is you need to understand what the tax professional who's working on your client's taxes need. Right? And I think it will go a long way to help you provide a better service to your client. Because look, here's what happens in the typical scenario that I've experienced. You have a bookkeeper, you have a client, and then you have the CPA, right? Bookkeeper's talking to the client and dealing with the day-to-day bookkeeping stuff. And separately, the client's talking to the CPA and dealing with the stuff they need to regarding their taxes and the tax planning. And there's almost like a disconnect because it seems almost rare that the bookkeeper goes directly to their CPA and says, hey, what do we need to get you, right? Instead, the CPA or the EA goes to the client, and then the client turns around and goes to the bookkeeper. And there's this three-way conversation that's somewhat disconnected. If you as the bookkeeper make it a point to be in better contact with the CPA or the enrolled agent or whomever is doing the taxes for your clients and have a better understanding of what that person needs, what's going to happen, and this is what happened for me years ago as I started, doing more and more sort of higher level, getting from bookkeeping into the CFO level stuff. I started finding that by communicating directly with the CPAs then were giving, sort of good reports back to the client and saying, hey, this guy's a keeper. He knows what he's doing, and that's what you want. You want to make that kind of impression on the person who's doing their taxes. So if you can do things at certain times of the year, like what we're going to show you today, so that you're doing things not just to get the bookkeeping done, not just to be in compliance, but to do things with an eye towards what are they going to need from me at the end of the day and what's going to make their life really easy, then that's going to, frankly, make you much better at your job, which is going to win you referrals. Right? At the end of the day, let's face it, that's the name of the game. We want to grow and build our businesses. The best way to do that is to get referrals. The best way to get referrals is to blow the client away with what we're able to do for them. So I think that's why it's important for bookkeepers to understand the kind of stuff like what we're about to show you today. Mariette?
Yeah, I absolutely agree. So what I've been working on with my clients and I work with CPAs and enrolled agents, believe it or not. I do taxes, but I've been trying to implement other services. So I work with other accounting professionals that do accounting and taxes, and I tell them that we really need to create this team effort. Even though I may do taxes, I feel like the bookkeeper, if my client has an in-house bookkeeper, the CPA, if he's involved, like I have a client that always has to have a CPA on staff because of audits and other kind of written compilations or financial statements. So there's a team, there's a collaborative team effort, and we all have to be involved, and we all have to really know our tools and use the tools. That way we can all talk the same language. I mean, really the only one that's really not using the tool, even though they can, is the client. A good example, and someone brought it up, is Tax Planner Pro. So that's basically a portal where you can do tax planning on. It does have a client access to it, but usually it would only be like the bookkeeper, myself, and the CPA would have access, but we could even bring the client in the conversation if we wanted to. So for me, it's really more of an advisory, valued, added service. And we say tax projections, but it's really tax and financial planning. It's planning for the future. It's planning to keep our clients in line. It's teaching them good habits. Like, are you an S-Corp? Are you putting yourself on payroll? What is that going to look like if we put you on payroll? So so tax projections, I don't want you guys to say, oh, it's just tax projections. It's not. It's tax and financial planning. That's what I like to call it.
Yeah, because at the end of the year, your clients are going to want to know, look, let's face it, whether you do this with them as the bookkeeper or not, the client's going to eventually go to the CPA or the EA, and they're going to say, okay, what do I need to do for taxes? And let's say it's October, November, it's coming up on the end of the year, and the CPA is going to say, well, you didn't pay yourself enough payroll. We need to run a $50,000 payroll to get more taxes paid in. And the client's going to panic and say, I don't have the cash available to do that. And then the tax professional is going to say, well, you only need enough to pay the taxes and we can zero out the net check, right? A lot of us do that. I do that with my own payroll. I pay myself payroll monthly, but I never take a paycheck. I always zero it out. And just it offsets against my distributions that I've taken out, so that I'm running it monthly and then zeroing it out just to get the taxes paid in, so I'm penalty free. And some people wait till the end of the year and they just do one big payroll at the end of the year. I learned the hard way. For me, that's not a good idea, because then if they tell me, hey, Seth, you need 30 grand to pay in taxes and I don't have it, I'm screwed, because now I only have a month and there's no way I'm going to be able to put 30 grand together in a month unless I have a really good month. So I prefer to do it monthly. And from everything I've read online and everything else, you really need to run that payroll monthly. I was originally of the understanding that if you ran it all at year end and paid all the taxes, and then it gets treated as though you'd paid evenly throughout the year. But the more recent stuff that I've read suggests that under an audit, they won't necessarily deem it that way, and they will go back and hit you with penalties for not having paid in quarterly. So
yes,
you might as well just cover your client's butt and have them run payroll at year end. Bottom line is this: if you haven't done any kind of planning like that with them, the client's going to turn around and blame you and say, you didn't tell me that I needed to do this. So it's not, like Mariette said, it's not just tax planning, it's really cash flow planning.
Yeah.
It's planning this one important piece of it so that you're able to put the client on notice that here's what you need to have set aside, if not paid in. Right? I have one client whose CPA is a little bit more aggressive about this stuff, and so he doesn't want them paying in all year long, because what if the client needs cash to buy a house? He's a real estate professional. So, they do wait till the end of the year and run one big payroll then and just pay all the taxes. He's the CPA. He's the one signing the return. So that's on him as far as I'm concerned. So I don't worry about that. The bottom line, though, is we're going to show you a tool, because whether it's tax projections or cash flow projections, the bottom line, it's, we want to have the tools in front of us that get us as close as we can ever come to having that crystal ball that tells us here's what the future is going to look like, so that we can plan for it today. And so that I can tell the client, set the money aside. More and more, as a CFO level consultant who works with these clients, I'm telling my clients, you know what? I'm doing this for myself. You need to do it for you. Every single dollar that comes in your door, you take 10% and sweep it into a savings account. I don't care how tight it is. And like I talked with Adam a while back about that, and under the Profit First heading, and I asked Adam, I said, what if the client doesn't really have the cash available to do that? And when Adam's answer was brilliant. He says, it forces you to get more creative about what you do with your planning and your cash flow. So this is that kind of tool. We're going to take a look. Mariette and I did this on a call a couple of years back in 2014, and we developed, over a several-week period, we developed a template. And a couple of weeks ago, Mariette and I started talking about it, saying, we should revisit that. And so what I did, of course, me being the me of today, is I converted it to Google Sheets, and Mariette and I have it shared, and Mariette's going to share her screen, and she's going to walk you through, what we had kind of created and what you can do with it and how you can use it. And then, of course, we'll make the template available to you for the low price of $6 million.
Okay. Let's go ahead and share my screen, share this one, share. All right. You guys see my screen?
Sharing is caring.
Right.
Got it.
Okay, good. I always want to make sure I see what you guys see. Where is that? A way to
is it small? We see your screen. We see the whole Excel sheet, and we can see the little icon of me because I'm also in the sheet right now.
Oh, okay.
So small right now.
Don't listen to Adam.
Oh, Seth is so small. That's why I'm like, what are you seeing? Okay, got it.
No, it's an inside joke.
Okay, got it. Okay, so, just to kind of recap what Seth said, and you know me, I'm more about resources because we cover so many things, and I have to go back and revisit everything we do and all these Zooms and these Hangouts that we have together. So, basically, we had this discussion a couple years ago, and so I'll probably put the link of that video from 2 years ago. Dennis was on it, myself, a few of us that are on here were on it, and we actually went through this sheet, and we went through how we actually can create the sheet, and there is Seth talking on there. I love that. So first thing is, so we started it in Excel back in the day 2 years ago, and he literally, like Seth does, created it while we were on the call. And so we were in the meeting, and that's why I want you guys to go back and watch that video because it was so awesome. He literally was creating the field, so I'm not going to even attempt any of that, okay? And so I'm just going to kind of go through what it's about. And more than that, I really want to take this call from me. My part of it is from the perspective that there are so many tools out there, guys, that you can use that are free or very, very, low priced to do what we're going to do today. And that's really my point here is, and last night, I just prepared an hour for this session today. And what I did is I actually pulled up Seth's sheet. I also pulled up, just so you know, Tax Planner Pro, which is here. I pulled up Pro Connect Tax Online because, as you guys know, you actually have a free account, and you can have 25 tax returns this year if you're a pro advisor, which are 25 individual returns. 15 individual returns and 10 business returns completely for free. So that's 25 total. And then I even went ahead and invested $50 on this really, really robust tax plan that I found online called the Very Plan. And basically it's a huge hardcore tax planning tool. But the point is, the only dollar I spent yesterday was $50 for this guy's because I was actually incredibly impressed by his tool. And everything else was completely free, what I did yesterday. So that's why really anybody can do what we're doing right now. Any bookkeeping professional, actually, I'm gonna reword that. I really suggest that you should be doing what we're doing because you're just going to be a superstar. When you go and tell your client, I'll give you an example. So this is completely free. I put in a couple numbers that I'm going to show you in a minute on Seth's Google Sheet. And I went ahead and calculated based on our, our template and our kind of estimate of a company that makes, I think they made $200,000, but they paid themselves $100,000. So it was really $100,000 flow through S-Corp and $100,000 in wages. I did that same exact scenario. And if this was real life, and I threw that into this Pro Connect Tax Online free tax return, I could tell my client, hey, guess what? For sure, you need to go ahead and pay $15,000 every quarter. Let's get you covered. Let's make sure at the very minimum you pay your estimated taxes. And you can tell them that in the beginning. So you can tell them that already so they're not crazy, shocked when you tell them how much they're going to owe in taxes. And I just did this by pulling up a free tax return on Pro Connect Tax Online. I also use QuickBooks Self-Employed. Also, guys, completely free. If you're a pro advisor, well, it's only $4 if you're not a pro advisor. But if you are a pro advisor, it's completely free, guys. We get a free account. And I did the same thing, and I calculated the same estimated taxes. So I know that sounds really crazy that I'm doing it in so many different places, but I just want to validate that the numbers come out and they're very similar. I mean, a couple of them were a few $100 difference. A couple times they were $1,000 difference. But if I tell my client they're going to owe $58,000 this year and they end up owing $55,000, that's awesome because then they're going to be like, woohoo, I owe less, but they're going to pay that 15 grand every quarter versus me going up to them at the end of the year and saying, you owe 50 grand. How much have you paid? Nothing. what? Like, you're going to have to write a check for 60 grand, buddy. Like, and I've had that happen. Okay. I'm guilty of it. Is that when I get a client that's, comes to me at the very end, that always gives me a stomach ache when they come to me at the end, because I don't know what they've been doing. And I have to be the bad messenger. I have to be the messenger that tells them, this is what you're going to owe. Just get your stomach ready for it, because we're going to pay this when we file your return.
Yeah, and if I can interrupt real quick, that's where if you can get them trained right now at the beginning of the year to start putting aside 10% of everything that comes in, then you're not going to have to worry about that, because they're going to have the money set aside so that whatever Mariette or whomever's doing their taxes comes back to them with projection-wise, they're going to actually, you're going to be their hero, because they're going to say, oh, thank God we put that money aside. Now we've got the money to cover and do what we need to do. Or maybe at that point, it's time to start talking about things like SEP IRAs or, or whatever retirement planning might make the most sense given their situation, so that they can take some of that money that was set aside and, rather than pay in extra taxes, do something to mitigate their tax liability and at the same time put money away for the future, such as what you do with a retirement plan.
And can I add one quick thing? Just
Please.
Because when I first started, I was intimidated by taxes.
By the way, just whoever's talking, just make sure people know who you are. Just
yeah,
let us know.
Sorry, it's Jan. But I just wanted you guys to know, like, you guys are really comfortable in the tax world, and I am too now, right? Because I've been doing this for a long time, like you guys. But when I used to get a tax return as a bookkeeper, I was just intimidated by all those schedules. I had no idea where to find the tax. I had no idea what these things meant. It was foreign to me, because all I knew was the bookwork. And when my clients came to me and they didn't pay in enough, then they had penalties on top, right? Because if you don't pay in enough, what does the IRS do? They penalize you, right? So not only do they not pay in enough, they get penalized. So here was the thing, is that I learned quickly to find out how much tax they had paid in from the prior year. And what I did was I got a copy of my client's tax return. I sat down with somebody I had trust who knew taxes, and I asked them to walk me through just the tax and say, how much did they pay in? And I took that tax number and said, okay, this is the minimum that we have to meet. And I divided that up by 12. And I made sure, one, that was what was paid in on their payroll. So then we made that in on, and how much we saved. So if it was $20,000 for the year, we had that either paid in or in the bank, right? Because otherwise we were going to be penalized. And I didn't want that to have happened, but you need to get that to the IRS. So at least on my part, I had done my job. I wasn't trying to do anything above and beyond. Now, I know you guys have the rest of this covered, but I just want to say that for some bookkeepers out there, this is overwhelming. And you guys are going to teach us how to kind of cover that or give a little bit more. But, when I first started, this was like rocket science to me.
No, and I appreciate you said that, because, and just to finish her point really quickly. So yeah, this is by no means am I saying like, do it tomorrow. Obviously it's going to take some homework, and Jan and I have talked about this, because her and I have had some pretty great discussions on why bookkeeping professionals should start considering kind of understanding the tax preparation side, understanding a tax return, the basics line by line, what each line means. And the reason I believe is so incredibly important is because, remember, bookkeeping professionals, you have those numbers, and all we're doing as tax professionals, if you're doing an amazing job, which I'm sure you are, is grabbing your numbers and just putting them on the line on a tax return. I mean, we're trying to trust that that that's the process. So if you know the process and we're all on the same page, it's literally, and I know Seth has a video on this, it literally should mirror each other. So your tax return and your book should mirror each other. And if they don't, I think Seth has a video where at the end of the year, he goes back and he enters in adjustments to make sure the returns look the same like the books. So if you understand that that's a process that's going to be done either by the tax professional, he has to go back and put the adjustments so that the books match, or a lot of times, and I'll be honest, the tax professional will send a journal entry list, right, to the bookkeeper, and assume the bookkeeper professional is going back and making the adjustments. And I don't know how many times I can tell you that I'm like, oh, so why don't I see any adjusted entries in here? What? Well, like every year how the tax professional after the return, he sends you a little email with the JEs. Oh yeah, we just file that away. I'm like, no, you're not supposed to file it away. You're supposed to go back and make those entries. So again, it's all about being comfortable that there is truly a workflow here. The workflow is getting the books done, getting the taxes done, adjusting the books for the tax return, and then having a beautiful start the next year.
Right. And if you, by the way, if you go through the tax return even on your own, what you're going to find is this is how I did it. I didn't have, I mean, it's first of all, it's a great suggestion by Jan to find somebody. Heck, get with me. I can walk you through a tax return to help you understand the schedules. Mm-hmm. I did it on my own because it was just logic to me. The tax return has a balance sheet, so I'd start there. The balance sheet on the tax return shows total cash. Does that agree to what the balance sheet on my QuickBooks company says? Make sure, of course, you've got it run for the right dates. And what Mariette is talking about is I have a video on a template that I created called the trial balance adjustment template, because every time I would get a new client set of books in and go to the CPA or EA, the first thing they'd want to know is, does retained earnings tie? Well, hopefully, as a bookkeeper, you at least understand what retained earnings is and especially where it is, right? It's on the balance sheet. And you can see that on the balance sheet in QuickBooks and compare that with retained earnings on the tax returns balance sheet. Mariette's got it up on screen. So I don't want to make this. In fact, what I'll do is I'm going to schedule another Zoom in with Seth where we're going to do this. We're just going to go through the tax return form and show you everything. And maybe Mariette can come back and join me for that, next week or the week after. I'll check what's the next available Friday is for this. But we're going to do that so that we, as a follow-up to this, really, so that we all understand that. But I don't want to, we're almost 30 minutes in. We haven't even really touched the template yet. So let's
so that's another one. Okay, so let's get into the template. Okay, so the idea.
And by the way, I'm sorry, Mariette, just real quick, because there's a question in the chat that pertains to this specifically. Sarah L. had asked about whether there's penalties even if they paid in what their tax professional suggested. So Mariette, explain the first thing here, the penalty-free threshold, and what that's all about, because that'll answer Sarah's question specifically.
Right, perfect. So ultimately, yes. So, if you go into the tax code, there's different ways for you to calculate how much you paid in tax. You could either pay 90% of what you were going to owe this year or 100% of what you owed last year. So when we actually created this calculation, we were figuring, okay, to not be overly conservative, because it's actually 110% if you're over a certain income threshold. So let's just say you made, I don't remember exactly what it is, but let's say 250,000. It's probably less, probably like 150,000. So if you made more than that, then they even want you to be extra conservative, and they want you to pay in 110%. So in that video I was telling you from a couple years ago, we kept on going back and forth. Should it be 90? Should it be 95? Should it be 100, 110? So we were just saying, as long as you paid 90% of last year, which is probably hopefully what you're going to owe this year, then you should be fine. If you want to be ultra conservative, you can go ahead and pay 100% of last year, or you can project your income and pay it. So, but honestly, if you want to be careful, just between 90 to 95% will keep you penalty free. And if not, it's going to be a really itty-bitty penalty, so you should be okay with that. But definitely minimum, you want to pay at least 90% of what you owed last year. So, okay, so let's talk about the assumptions. So there's a few things going on in this spreadsheet. So if you notice on the bottom, and I'm thinking you guys can see the bottom perfect well. Yep. So we have a few tabs. So we have an assumptions tab, a data entry tab, the S-Corp tab, the personal tab, and then the scrap worksheet tab is pretty much the data, like what we're doing. So, well,
and that was just when we first sketched it out, and then I went and cleaned it up. So this is just there almost as like your museum artifact to show you what this evolved from.
Oh, perfect. Okay, good. It's been a couple of years, and so yep. You have to remind me. Okay, so the assumptions idea is, Sarah was a perfect segue. That wasn't intentional, but what the things that should be assumed, or things that have to be part of the calculation no matter what. One of them is, we definitely don't want that client to be penalized. And just so you know, I keep on saying client, but we can use this for ourselves. We can use it for our colleagues, our friends, our family. So also, obviously, tax rates. So how much should they be withholding as a percentage of their income in tax? So here we were assuming they were at a 20% withholding rate and a 10% withholding rate here. And then this is basically so we're going to calculate their payroll, and let's just say they're going to consider a retirement planning investment strategy. Like, okay, so we have a really big profit. We have a really decent payroll. So that means we can actually pull some of that money out and put it into a retirement plan, right? So this was just an example of if they decided to use the SEP IRA strategy, which a lot of these strategies are out there that you can learn about. Another thing just to kind of pull in other opportunities to play around with this is Tax Planner Pro has what they call the what is it called? Just so I can show you really quickly. The simulator. So the simulator, what I love about that is that it actually gives you already different opportunities to pull in examples. So in the retirement planning simulator is example of if someone put in money in a SEP or 401k or a traditional IRA. So, you know, obviously our sheet is not going to go too much in depth because it's really for you guys to take it and create your own simulations or your own assumptions. But if you use another tool like, you know, Tax Planner Pro or even QuickBooks Self-Employed, believe it or not, there are assumptions in there too where you can create assumptions. You can really take this to the next level with your client. So that's what the assumptions is. Data entry is obviously data entry. And so this would be where, and now you have to forgive me, Seth, because I don't want to mess up formulas. So this is truly just where we could put in the money.
Yeah, that's the whole idea is this data entry is just that. This is where you can enter stuff. So you put in the net income.
Okay.
This is what's going to be different for each scenario that you analyze, right?
Oh, okay,
Same
perfect.
with the previous tab. We might decide if you go back to the assumptions for a minute,
Mm-hmm.
you know, all these numbers can be changed. So if we decide that for whatever reason in a particular client's case, we want to up the percentage threshold to 110% to be the most conservative, you know, that all this can be changed. And anything that's lit up in green and yellow like that, the idea in financial modeling, that's what we typically do is we do like color coding to let you know what can be entered versus what's calculated. So anything like this can be changed. If they, for some reason, change the Social Security and Medicare rate, I made that variable just in case, you know.
Right. Mm-hmm.
And then the idea of the SEP IRA here was because the SEP IRA limitation is dependent upon what the salary is, right? We wanted to make
Mm-hmm.
that variable too. And each year that percentage of payroll, well, I suppose it could change. I don't think it has in a long time. But the idea is you can pay in a percentage of whatever you've paid yourself in payroll. So that's why we make this stuff variable. So then back to the data entry tab, you know, you would run your client's P&Ls or your own P&Ls and you'd say, all right, S-Corp net income is this. How much salaries have we paid year to date? Right, so let's say we only paid $25,000 in salaries so far for the, and this is officer salaries, obviously. And then how much distributions had we taken, right? And then we need last year's tax liability off the tax return because that's going to be compared with that threshold that we use to determine if we've paid enough in or if we need to pay more in or what.
Okay, perfect. So, and then just with here, that's I love how you brought up the SEP IRA. So yeah, sometimes what you're going to want to do, and this was just kind of an example of what we did. So if you do put in assumption, and this is for everyone, again, bookkeeping professionals, I would kind of push you more than anything, is write notes for yourself. So for instance, SEP IRA, you're like, okay, what is a SEP IRA and what, you know, what's the benefit of that? So here's an example I mentioned, you know, so if you have a pretty decent profit and you paid yourself a decent salary, you can go ahead and pull some of that money up into retirement. So what we did here is we said, okay, so what is the maximum? So there's usually a maximum amount that you can actually pull out in contributions, but as Seth mentioned, it can't be 20, it can never be more than 25% of payroll. So you'll definitely want to go ahead and learn your laws, and then when you do, go ahead and make little notes. So this was, again, just a rough note of for you, if you go ahead and grab this sheet and save it for yourself, make notes on why you would assume SEP IRA. And not only that, what is the rule? Because you don't want to say, oh yeah, so I'm going to go ahead and take $70,000 in SEP IRA. Well, no, because remember, there's a rule behind it. So that's why you have to remember to go ahead and learn the rule and then just make little notes on the sheet like we did here.
Right, and that last line before you go away,
Mm-hmm.
the last line basically says, okay, if you want to contribute $54,000 because it's 25%, it calculates the max salaries you need to pay. So if you want to contribute $54,000, then you need to make sure, just hit escape so you're out of the formula mode, so people can see the result. You need to make sure that you've paid yourself at least $216,000 in salaries. So, you know, and this is where the cash flow planning really comes in as a very direct tangent to this, because if you don't have at least enough money to cover the taxes on whatever payroll's needed to get up to $216,000, you're dead in the water with this plan. So that's why the cash flow planning is so directly tied into this.
Yep, definitely agree with you. So, okay, so then let's just go into a quick scenario again. This is just to show you how it works. So we're assuming $100,000 in net income. We're assuming they paid themselves $25,000 so far. They've already distributed themselves $30,000. most likely, actually, let's be more realistic, they probably went ahead and paid themselves 50 grand. And their last year's tax liability is 30,000, just for the estimate here. So then we're going to actually go. So here's what we did next. So when we, again, going back to when we did this like on a two-part meeting last time. So we started with just the S-Corp, and then we realized, hey, wait a second. Obviously, as an S-Corp being a pass-through, again, bookkeeping professionals more than anything, just understanding what a pass-through means, that, you know, the money goes from a specific entity that is a pass-through entity. An S-Corp is a pass-through, an LLC that's a partnership would be a pass-through. And so the money actually goes into the personal return, and that's really where the liability happens. So we figured this wouldn't be a true projection if we didn't pull in both S-Corp and personal. So that's the idea here, is that you can't stop at the S-Corp. You really have to follow this through into their personal return. Again, pulling in another application like Tax Planner Pro or even the free ProConnect tax return, that's what I did here, is I just went ahead and said, okay, if you are an individual person and you owe this much, if you made this much in your S-Corp, what does your personal tax return look like? And this is really goes down to Jan's idea, and we'll have another meeting about it. But remember, guys, this is what it's really about. We're doing all this accounting, we're getting them all good, but if they're an S-Corp shareholder, one shareholder, 100% owned, remember, it really ends up on their personal return. What does that mean to them, and how important is that for a bookkeeping professional to know that that's the workflow? So that's why I feel like it keeps going back to making sure you have that team. So okay, here we go. So that's why we have an S-Corp and a personal, right? So on the S-Corp level, we went ahead and it shows they have 100,000 in S-Corp income. They paid themselves $25,000. Based on their salary, they are allowed $6,250, and so they have a net projected income of $93,000. And so what we did here, and again, this was just us kind of playing around and getting ideas. And as I mentioned, like for reals, I'm not lying, Seth did this on a show, which I would never attempt to do.
I did it on the fly.
It's crazy. So, and then he did the formatting too, which, oh my God, whatever. Anyways, so, so we just started saying here, like, well, come on, let's build this out more. Like, what kind of deductions? Obviously, they have a lot more going on. So again, getting a little bit more tax, related in regards to, well, what do you mean by deductions? Well, what kind of expenses could they also consider towards the end of the year? Remember, just to kind of go back, this is not to be done like now. Even though we're talking about this in January, the idea is to be pulling up this sheet throughout the year. And definitely pulling up the sheet in the last quarter. Like this is like a critical conversation to have in the fourth quarter, but you can be kind of using the sheet throughout the year. Even though we're showing it in January, this is really after the fact. The idea is to be doing this throughout the year.
Yeah, like start doing it now to plan for the end of this year, because
right.
This part here that Mariette is on, the idea is we get through all this and we see, all right, well, the projected net income is $93,750. Scroll down. Let's see what we're looking at tax liability wise for a minute. So we're saying that.
Oh, actually, it's going to be on the personal side.
Right. So let's go down and see. So minimum. So it looks like the potential cash requirement is going to be $32,000, right? The potential tax liability is $26,000. So then we say, okay, now that we see this, and the client, what if the client says, I don't want to pay that much in taxes? What can we do? Let's go back to the S-Corp tab, because now we can start looking at how can we get extra deductions on the books. And I love what Chris Reagan says. For those who don't know, he's the one who created Tax Planner Pro. Because he says that and it's right on his website, he can guarantee you that he can get your tax liability down to $1, no matter what. And I asked him, I called him on that. I said, how can you make that guarantee? But in the end, it's very logical, because the reality is if you have the cash, you can buy your deductions by spending money on things that are legitimate deductions. So that's why we said, well, maybe we need some fixed assets. Maybe this is the time to spend money on equipment, because then we know we can deduct the whole thing using Section 179, right?
Mm-hmm.
So we can spend 30 grand on new equipment, deduct the whole thing. That's going to lower our net income from the S-Corp, which then flows over to the personal, so that we can mitigate our tax liability. Right?
Right.
And that's why we go back to also factoring in a retirement plan option, because we could go back and say, well, maybe we can put more money into the SEP IRA. Now, Alexa asked, I don't see the simple IRA. We didn't do the simple IRA here. The reason we did the SEP IRA was because A, I think it's more popular these days to do that, and B, it's the one that's more complex in terms of having that threshold and the limit based on the percent of salaries. And So we it's not all inclusive. This was just like Mariette said, on the fly. We sketched out a template here and said, let's just create something you can use for planning. If you want to get real sophisticated with this, then just use Tax Planner Pro. You're much better off, and it's worth the money. Yeah,
and Alexa, I think that's a really good point. Dennis, 1 second. Is that, remember, this whole thing is about you guys to see, and hope, I don't know how Seth is going to distribute this out, where he's going to put it, but as you can see, it's really simple at this point to just start creating more assumptions. And I agree with the simple IRA. I actually, for some clients, the simple is always a better choice than the SEP because of the requirements of the SEP, and depending on how many shareholders are in there or partners, it's kind of more stringent in regards to putting money in. So I would include the simple in here and see what that looks like. So I completely agree with you. But the point is to give you guys a true start. But even more importantly, I just want to show you this before I listen to have Dennis interject, is that what our biggest concern was, and where this whole conversation started, to be honest with you, even before we decided to do assumptions and try to see what net income will look like and projected net income, is the fact that in real life, let's just talk about real life, we will actually have a client come in, and I actually put a Facebook group message that we had, and Joanne, I really appreciated her being really honest and saying, and this is coming back from what Seth said. So in real life, we will have a client come in, and they will have not paid themselves payroll all year, and they will have withdrawn $50,000. And some of them, and I really truly believe, they really are like, well, I have been paying myself. I've been pulling out money. And I said, well, you're an S corporation, so it was payroll, right? No, I just pulling out money. I've been withdrawing. I said, you can't withdraw. You're not a sole proprietor, and so we have to have that discussion, and then it's a hard discussion to have. But this spreadsheet, the idea was that if that's the situation, there is a way for us to catch up, and there is a way for us to still do good by our clients. And it's like, if they went ahead and if they have enough profit to pull out the same amount, and this is what Seth said, to just kind of make sure you understand, if they went ahead and they have $100,000 in profit, let's just say that, and they've already pulled out $50,000 in distributions, at the bare minimum, guys, they have to pay themselves $50,000 in payroll, because that's what was probably considered reasonable payroll. And again, let's not go ahead and say, well, what if it's not reasonable? Let's not do that. Okay, let's just say in this case, let's say it is considered reasonable compensation. So they can't go ahead and distribute $50,000 to themselves if that really should have been reasonable compensation. So this is the idea here, is let's kind of catch up with them. And not only that, let's have them visually see, like, if you paid yourself $50,000 and withdrew it, then where is that payroll? Because we got to go ahead and go and pay you $50,000, and what does that really mean? So that's really why we created this spreadsheet. But you can go and crazy with assumptions all you want.
I was going to make. If you add assumptions, you got to redo the formula. So if you need help with that, get with me.
Get with him.
I was going to make the point that you're going to have to spend the money anyway, either for taxes or for benefiting yourself. So you might as well pay for benefiting yourself, either through buying equipment or doing an IRA, because you have to pay the cash out anyway, one way or the other.
Yeah.
Another thing I do, like for S-Corps, that people haven't taken out a distribution or haven't taken it, I'm so sorry. One thing some of my CPA friends do is that we issue a 1099 to the owner, and then that way it shows up on a Schedule C, and so at least they're going to, the IRS can't say they're not paying their payroll taxes because it will be covered on the Schedule C. But
would that be for a partner? They're in a partnership?
Well, I'm talking about like an S-Corp, a one-person S-Corp, where...
Why wouldn't you just cut them on the year-end big bonus payroll check?
Well, sometimes it's like in March or whatever when you've discovered...
I get it. Okay.
So it's kind of a imperfect solution to accounting for trying to stay out of trouble with the IRS for not paying yourself a salary and the payroll taxes, but it's kind of a one-time shot.
Actually, I think I appreciate that. And I think people that are listening, I think that could be a good argument. Like, hey, we did the best we can. It's after the fact. We really obviously can't go back into the prior year and cut a check if you're not using like an after the fact payroll and you're not in January. Of course, there's a discussion on Facebook on what if we have to cut the payroll check right now. Just so you know, if you're in January and you're using like QuickBooks Desktop and you haven't filed your returns yet, you can still do that. So you still can be good and get your clients good and be in a good place. If you're in March or April, obviously, Dennis, I agree. Like, you need to do something. And I think that is a good argument and a position to be in, to tell the IRS, hey, we did this. I know it's not, technically correct by any means, but we paid the self-employment tax. And at the end of the day, that's what this is about, is trying to not get out of your self-employment tax. So something else I wanted to show you here. So you hear a lot about the percentages. And just to kind of break it down, so end of the year, same example, your client comes in, they haven't paid themselves salary, and they're like, well, I've been reading all these blogs on supposedly, as long as my profit is 100,000 and I distributed, 50% to me and the other 50% I paid in salary, that is considered reasonable. So so that's why we put percentages here, because people use different ideas, or they sell the idea of an S-Corp in different ways in regards to be an S-Corp and just pay yourself a payroll of 30% and then distribute 70% out. Or I would say the completely opposite, pay yourself 80% and distribute 20%, because I'm more conservative. But that's the idea behind percentages, is at the very minimum, show this to your client and tell them, okay, guys, you paid yourself 70% in distributions and only paid yourself 30% in salaries. That is an upside down calculation.
Right. By the way, Mariette, let me stop you for a second, because Jennifer is asking a really good question in the chat. She says, as a bookkeeper, should we really be doing this or telling the client they need to get with the Tax Pro and do this? My answer is, if you use a simple worksheet like this, or even if you use Tax Planner Pro, you can start the process by going through it with your client, and they'll see that you're really creating tremendous value, going way above and beyond what they would ever expect of their bookkeeper. But then, of course, after you do like an initial analysis like this with your client, then you should definitely say, okay, now do me a favor and take what we've just kind of sketched out here, because it is just a rough sketch, and get with your tax professional and do this. Or like we talked about at the beginning of the hour, get the client to put you in touch directly with their CPA, so you can send it to their CPA or EA and say, hey, I just sketched this out. This is a template I got from this knucklehead named Seth, and I just wanted to see what you think, but this is what I'm looking at for the client. This way you can take it to the next level and do the real Tax Pro side of it and go back to the client. Again, it's about being proactive and doing the planning and getting the client to do it. So I do think you can do this as a bookkeeper, because the way this is laid out, you're just doing simple data entry at this point based on the work that you have done putting the books together to get an idea of what this might look like. And going back to the comment about clients saying, well, I've been reading all this blogs, your first response to that should be to ask them, okay, so those blogs you're reading, what part of the tax code did they reference? Because it's in a blog doesn't make it right or true or accurate. So, and another question that just came in the chat, when should you do this? We kind of already talked about that. So the most critical time is the last quarter of the year, right? Going into the beginning of the fourth quarter. But what we were saying, and Jan says it also in the chat, is, now is a great time to start and then revisit it monthly or quarterly, so that, again, as the year progresses, if you see a potential problem because the client, let's say, starts making a ton of money, you can nip it in the bud and not wait, because even by Q4, if it ends up being that they're going to have a huge tax liability, they may not have the cash available. I have a client who makes a ton of money as a real estate agent, but he also spends a ton of money. The guy, I was cracking up at this. I couldn't help but tell my wife, we were both having a laugh. The guy pays $3,000 a month to lease a Bentley. Okay, so that's the problem with some of these clients. When they start making a lot of money, they spend it all and they don't leave enough aside, even when they're making that level of income. Almost, I'd say, especially when they're making that level of income, they have a tendency to just blow it because they think it's going to always be plentiful. And then we're the ones they blame when they don't have enough money because they didn't do the right tax planning.
Yeah, so, and I completely agree. I wanted to show you guys something really quickly, just because as Seth mentioned, I would say you have this conversation no matter what, because you don't want to be, for me, I would say you want to be well aware of the numbers. So let's just say I gave you the example that you went ahead and said, okay, well, Mariette said there's something free out there. Why wouldn't I just play around and see it? Do it for yourself. Put your own numbers in there and see what your projection looks like. And then if you go ahead and, let's say this tax return right here, you went ahead and pulled up the 10, and this is a video of it, again, completely free. You can actually pull up like the 1040 estimate window, or you can pull up the letter where it tells you what the estimates are going to look like. If you know your client's going to owe about $18,000, then, first of all, definitely call the tax professional and make sure that they're talking to the client about it. But if you're the ones working with the numbers, then you want to have that discussion with your client too. Like, did you know you're probably going to owe about 18, 20 grand? Have you been, as Seth said, have you been pulling that money aside? And if you're using Profit First, because I believe Adam is on here, you can go ahead and like pull out that side, and I think you put it in a separate savings account or something. So again, these are all opportunities for you to be like, or this is a good example too. And again, all bookkeeping professionals should know, depending on your state, you may have a different way to actually pay estimated taxes. For California, you actually pay a certain percentage first, second, nothing in the third, and then you pay again in the fourth. Like, does your client know that? Did they know that they have to pay on the 18th, on 6/15, nothing in September, and then again in January? Do they know that? That's the kind of stuff that we should know because we're in the accounting world, and I think they would be so grateful for you to bring that up to their attention too. And what's going to happen? I'll guarantee I know what's going to happen. They're going to like, my tax professional never said that. They never had that discussion with me. And so what does that mean? They probably want to, you know, talk to their tax professional, or they may need to find another one. But the point is that you're going to be the hero. You really are. So, all right. And so, and I kind of gave you an example too. I changed the numbers around. I went ahead and made it a little bit more appropriate. So in this case, they're now paying themselves $120,000 in salary. They distributed 50. So like if this client came to me at the end of the year, I obviously would feel much more comfortable with their situation. But I would still put the numbers in there and see where they're at. And then the personal tab at the very end is really, this is truly taking it to the next level. So this is when we kept on talking about Tax Planner Pro, even QuickBooks Self-Employed. This is where you are now doing the true flow through from, you did the projections, you put in some assumptions in the S-Corp, you went ahead and maybe consider new equipment or the SEP IRA or Simple, and then you pulled it into their personal tax return, because I mentioned before, everything flows into their personal if they have a pass-through entity, and now you're actually telling them, and this is so important, guys, you're telling them what their true cash requirement is. And so, and this is what's confusing for me, and I think that we have something, Seth wrote something about this. What does it really mean to write yourself a net check? So that's a really confusing concept, guys. So basically what it means, and Seth said it in the beginning, so I'll kind of say it again and maybe it'll make sense, or I'll put a link to a blog that him and I wrote, because I think we both have written blogs on it. So basically, let's just say at the end of the year, they went ahead and they didn't pay themselves any salary, but they withdrew $30,000, okay? And let's say for this example, we're gonna go ahead and say $30,000 payroll is acceptable. It's reasonable compensation. And remember, there's a lot of ways for you to learn about reasonable compensation. CP Academy has amazing webinars on them. I always post about them. So you go ahead and you agree with the client that $30,000 is reasonable compensation. And make sure the client agrees. You don't tell them what their compensation is, guys. Don't put yourselves in liability. They tell you what they believe it is, and you've done your research. And so let's just say 30 grand is the magic number. So as Seth was mentioning, you're not going to tell your client to write themselves a payroll check for 30,000 gross plus all their taxes, which would be like around $45,000. You're not going to tell them to do that. You're going to tell them that, guess what, that $30,000, you've already paid yourself that, guys. You've been pulling that money out. All you need to do at the end of the year is pay the taxes on that money. So they owe the payroll taxes on that money, but they don't actually write themselves a check for 45 grand. They write themselves, they just go ahead and file a payroll tax return, and they pay the taxes that would have been on a payroll of 30,000. Seth, you want to?
So here, it might look something like this. This is what I love about Google Sheets. So let's say the gross pay was $30,000.
Can I get you to share? Are you sharing?
No, scroll up on your screen. You'll see exactly what I'm doing. There we go. So let's say the gross pay was $30,000. Let's
right
say
here.
the tax liabilities on that, if I can type, would be, we're going to subtract, let's say the 30,000, oops, equals negative 30,000 times, let's just call it 30%, right? So the net check then would be the difference, of course.
Right.
Right, so the net check ordinarily would be the 21,000, but then we're going to tell ADP or whoever's processing our payroll, our paychecks, we're going to say zero this out. So what they're going to do is they're going to say, I just tell them to call it employee advances. I don't want to sit there trying to explain this to the payroll rep, right? So I'll just call it employee advance repayment or something. Doesn't really matter. equals minus 21,000. So all they need is the 9,000 for the employee's share plus the employer's share of the taxes, the Social Security and Medicare matching, and the unemployment insurance and all that. So they're going to need the cash requirement is going to be the 9,000 for the taxes for the employee's withholdings plus the employer's share. You add those two together, and you're going to get the total tax or cash requirement.
Exactly. And just so you know, I had to do this for a client, and I loved Gusto. They made it so incredibly simple for me. I got on a call with Gusto. They went ahead and they have 2 videos. Actually, I made a blog about it, and you guys can watch it. But they have 2 videos on how to set up an S-Corp shareholder and then how to do an actual paycheck that's only including the payroll taxes. So let's say that S-Corp shareholder was on direct deposit. You take him off direct deposit for that paycheck only, and then you call it a written check, and you basically say the written part of it, the net part, has already been paid to the employee, and all I want to do is actually process the payroll taxes side of it. And so Gusto did that so perfectly for me, and so I haven't used ADP yet, but Gusto did it really well. But just like Seth said, it's essentially you're just processing real cash for the payroll taxes, which is the employer side and the employee side of taxes. Yep. So, yeah.
I do that monthly, by the way. I use paychecks, and I like that because even though it's a little old school, it's easy because each pay period, she just emails me a couple days before and says, what's payroll look like this time? And I just tell her, run me a $5,000 payroll with a $0 net check, and she knows exactly what to do.
I love that. I think that's awesome. And a lot of them, I think that's very smart because you actually look at how you're doing and you decide on how much you're going to pay yourself. Another thing is, if you want to be a little more conservative, is just put yourself on a biweekly payroll. A lot of these companies, I know ADP Payroll Run and Gusto. I don't know if Intuit Online Payroll has it. You guys can let us know. But they have what's called autopilot, where you just set it up and then it just automatically processes the check for you. So obviously you're not going to use $5,000. You're probably going to use, $1,200 or $1,500. And I actually had a client just ask me this the other day. Well, Mariette, if I put on $1,500 at the end, that was too little, then am I going to be in trouble? I said, no, for 2 reasons. Because you're paying yourself payroll. Heck yeah, that's awesome. And we're going to be looking at your books quarterly, so we're going to catch you up. So at the end of the quarter, we'll go ahead and play that catch-up card if we need to. But you're definitely not going to be in trouble. You're actually doing it the right way. So that's another option too.
Right. And by the way, for 2015, because I was very diligent about doing this and I paid myself the monthly payroll consistently, I still always like to have them check with me because in case cash flow is tight one month and I don't, at one point what I said was, rather than doing $5,000 once a month, I did $2,500 twice a month, whatever. I just wanted to, I always want to make sure the cash flow is, working with what I'm doing. But anyway, when I got my 2015 returns filed, I ended up owing, all told, federal and state, $1,000. So I had really done the planning well. I was just about flat on what I owed.
That's awesome. So I wanted to just show you guys this. I've already, told you that Tax Planner Pro. That's what I use, just so you know. I like the Google Sheet. Well, now I do because it took us like a while to find it. But Seth dug it through his files and he found it. Thank you for that. And I guess you'll let us know how you're going to share it. I personally use Tax Planner Pro. And for the person that asked, when do you have that discussion or should we? So if you were using Tax Planner Pro, and here's a good example. They have all kinds of reports. He's working on the reports. Really what he spent a lot of time on in money and investment is his simulator, which is amazing. But when I just stick a number in here, which this took me 2 minutes, guys, I stuck a couple numbers in here and I saw that my client's going to owe 62 grand. That's when you pick up the phone. Okay, and it's so valuable to you to use something like this. And of course, it has a portal like all the other accountant portals, so it's really awesome. But here's another option. Oh, there's my baby. You can use QuickBooks Self-Employed, and it's, again, free for Pro Advisors, $4 for everybody else. But they have this area here called their quarterly taxes area. And then here on the right, they have what's called their tax profile and their projections. Believe it or not, I was able to get the same numbers. I mean, and again, I should believe it, but since it's like a self-employed product and it's brand new, I was a little bit nervous. And so I went in here and under tax profile, just a couple things is really important. So in any solution, so I think a perfect example was we called it assumptions for Seth. in Tax Planner Pro, he calls it profile, and in self-employed, they call it tax profile. You always have to have assumptions, guys. So then, you know, the assumption is it's a single person, they're not a head of household, and let's just say that's it, right? And so in the projections area, you actually can go ahead and open up the projections area. And why is it not letting me do it? Hold on, come on, don't give me a problem right now. You can open up the projections area and do the same thing that we did right now. You can, what the heck? Oh, I'm sorry, because I can't make sense. I can't go back and project last year, okay? I have to project this year. So I can open these up, and I can just manually put in the numbers to that same 100,000 in profit that we figured on Seth's sheet, that same 100,000 that I figured on Tax Planner Pro, the same 100,000 I figured on ProConnect Tax Online. I can do it here in QuickBooks Self-Employed, and basically it will go ahead and give you my estimate. And so just wanted to show you that. So you can come in here and play around here as well, and do a quick little projection and have it. And then the nice thing about here, it goes ahead and it creates quarterly estimates, which is really cool. So I'm going to pull up 2017, see how right here, and I have videos on how to use this. I'm not going to show you how to use it, but basically here are all the different tax years, and on 2017, see, it's about $50,000. And so that's what I was getting over there on Tax Planner Pro. That's what I was getting on ProConnect Tax Online. And so I'm like, again, if I'm off by a couple thousand, like Seth just admitted he paid $1,000. My clients still get mad when they come to me and they have to pay $1,000. They get mad when they come to me and they have to pay $15,000 or $5,000. So if they have to pay a couple thousand, they're like happy. Well, they're not happy, but they're happier than if you go ahead and tell them they have to pay $15,000, $20,000. So I just wanted to let you know that you guys can use QuickBooks Self-Employed for that as well. So yeah, there's a lot of tools for bookkeeping professionals and obviously tax professionals. You can use Self-Employed, you can use Tax Planner Pro, you can use Seth Sheet, you can use ProConnect Tax Online.
I don't want to interrupt, but even if you're unsure, right, these are tools where you as a bookkeeper or a bookkeeping professional can say to somebody who knows more than we do in the tax area, hey, could you just check my numbers, because I think that we might have a problem. And that's what I used to do. I used to say, look, I think my client is hitting danger Will Robbins area. Let's go back and have somebody take a look at this, because I think we might be in some trouble. This is an opportunity for us to sit down. And let me just tell you, I did not let my client go and talk to the CPA without me being there for two reasons. One, I knew the numbers and I knew what was going on. And two, I wanted to use it as a learning opportunity for me. And I wanted to be the star that would shine as well. So I sat down and I said, look, here's my projections. I think we owe $60,000 or will potentially owe $60,000. Let's have a conversation. And I made myself bullet points and I would go through it, but I used that opportunity to look like, you know, the person who had the authority. And I was the person who had the authority, but to give myself that confidence and to stand up, because the CPA is not going to make me look bad in front of my employer, my owner right there. And the other thing is that I'm the one who's got the numbers. Mm-hmm. So it gave me the opportunity to really know those numbers, to talk through it, and to learn and create that good working relationship. And more, it really helps develop that team atmosphere with the CPA. So this is a really good entryway to develop a great relationship with your CPA and with that business owner.
Yeah, as the bookkeeper, you want to be the gatekeeper, so to speak. So you want to be that first line of defense who's able to say to the tax pro, hey, look, I took a look. I went above and beyond what I normally am expected to do as a bookkeeper. I just scratched out some numbers here. I use this product called Tax Planner Pro. You'll probably wind up getting the CPA or EA to want to get Tax Planner Pro as a result. Not only that, but you know, the reality is, and I've seen this too much over the years, and I've seen, especially I've seen too many bookkeepers who are timid about approaching the CPAs and the enrolled agents, because very frankly, a lot of CPAs, in particular, I see this more with the CPAs than the enrolled agents for some reason, they tend to talk in a very condescending manner to the bookkeeper. And that puts the bookkeeper in a position where they feel very timid about approaching the CPA. But if you as the bookkeeper start doing stuff like this and sort of ignore or usurp that attitude that you sometimes get, it will turn around in an instant, and they will start respecting you as somebody who really knows what they're doing.
Absolutely.
So don't sit there trying to do it verbally. Just show them, hey, I'm not an idiot. I know what I'm doing. And in that way, you kind of command the respect of the tax professional.
Mhm.
We're about out of time. Mariette, do you want to?
I just want to do two things, and I just want to let you guys know. So, again, and we're not paid by Chris or anything. We just really feel like he has a valuable tool. Something about Tax Planner Pro that I feel is incredibly valuable is that he makes a crazy amount of videos, just like Seth, and they are incredibly detailed. So for those bookkeeping professionals, I mean, you may feel intimidated, but he goes in and creates simulations and cases and tells you where to click and why not, and incredibly valuable. He also has a Facebook group private for people that are that use his software, that he is very active. He's another person that doesn't sleep. So very, very active on there. And the last thing I wanted to tell you, and just because at this point, the only software that I know that's not a tax solution, not a tax software, that implements an actual quarterly estimated projection and bookkeeping is Self-Employed. So that's why I feel if you don't want to do anything else in Self-Employed, I know there's people still the bad rap about Self-Employed, whatever, but if you don't want to use this tool at all for the bookkeeping, why wouldn't you just use it for the projections? I mean, really, you can get the projections. You actually can print out the estimated form for your clients, everything in here. So I just wanted to let you know, take advantage of these tools. They're so inexpensive, and it's just going to make you a better bookkeeping professional. And that's it.
All right, you want to come off screen share, Mariette? And if anybody has any
Yes, sir.
final questions or answers.
I have a question.
Yeah.
Can you talk a little bit about the Vera plan, how you use it?
Oh, Dennis, let's do that one sidebar, or maybe we can do that in Gina's or another one. Or you and I can have a private one just because it's so complicated.
Oh, are you going to be on Gina's Hangout today?
Yeah, I'll try to get on there. I started playing around with it. Like I said, I did this whole preparation for like 45 minutes last night to get on all these tools. I had seen Veriplan before, and I was incredibly impressed because what it is, it's actually a lifetime tax and financial planning tool. So you could take it over 30, 40 years, depending on when you want to retire. So it's mind-blowing. The guy is like an MBA, and he's a professor and all these amazing things. I'll go ahead and put a link to it. I'll do that. But yeah, you and I can talk about it separately. It's very, very complex. Would never recommend it to anyone that doesn't have a very strong tax background.
Gina, do you want to quickly get on and tell us about your hangout later today? We got to wrap up here because it's 5 after 9. I don't want to cut people off like I did last week, but I have to run.
And you're a professor. We got to go.
Okay, 5:30 today, Eastern. Join my Facebook group if you want to participate. It's an open session. And it looks like we'll be talking about the Veriplan.
Yep. And next week, we're going to do understanding your tax return. I didn't have anything scheduled, so that's going to be our subject next week. Mariette, hopefully you can come back and join us again.
Yes, this is awesome. Thank you, guys, and have an amazing tax season and accounting season.
All right. We'll see you all online.
All right. Bye, guys.
Bye.
Bye.